the other important voice of the day, Mr. Rajnish Kumar, Chairman, State Bank of India, joins in to answer all the questions that one has on the future of the banking giant. Mr. Kumar, it's great to have you on the show. Thanks very much. Good morning to you. Thanks very much for taking out the time. Sir, my first very frank question, and this
Good morning.
This is as simply as I can put it. With your last reported numbers, the only thing that the market has on its mind right now with regards to the future of SBI's earnings is when will these losses reverse and when can we see profits back?
So profit will definitely start this year, and in my earnings call also I had mentioned that in June quarter and September quarters, because quite a few big accounts are lined up for recovery and resolution through IBC process. So depending upon when do we get the money, there may be some timing difference between the 2 quarters, but the performance of State Bank of India should be looked at only after the half year 30th September. But this year 100% we will be in profit.
Mr. Kumar, good morning. Nikunj Dalmia also joining in, and let me ask you a question which in a sense I've got a sense from a lot of investors and shareholders. They are of the view that in the past also your predecessors have always indicated that the asset quality will bottom out, but somehow there has been a mismatch in the communication versus actual delivery. I hope you'll understand where I'm coming from.
Right. So this time probably there are 2 options for the investors. One is to believe what I am saying, or to wait for some time and then believe. So the choice I leave it to the investors.
Confidence, and I'm sure everybody would love to, it's such a confident comment. That's an headline what you've given us. So I was looking at yesterday's GDP data, and the GDP data clearly is indicating that things are looking up largely because of government spend. So what is your sense on the private sector capex? The world wants to hear from India's biggest banker as to what his take on the economic recovery is.
In my all earlier interactions also I have mentioned that the government spend on the infrastructure has increased, and that is what is driving the economic growth, and the other is the consumption story is fairly intact. We are seeing pickup in housing segment, the auto segment was doing well, there is a pickup in the steel sector, there is a pickup in cement sector, and in this quarter even the core sector has performed relatively better. So the private sector investment will follow the government spend. That way the outlook for the economy this year should improve, and this is something what we are witnessing also on the ground, and it is an infrastructure led story definitely, and the private sector participation in the infrastructure story is not about owning the asset, which was the case earlier, but EPC sector or the construction sector will be doing very well, but the funding will mostly be coming from the government or the institutions owned by the government like NHAI.
Mr. Kumar, my only follow-up, sir, to that answer that you've given to Nikunj's question is that, it's a bit of wishful thinking that bankers, economists world over are working with that, government spending will be followed by private investment. It's not really played out in the numbers on the ground. And so my only thought process there is, if on the horizon you are seeing a rising interest rate scenario, how compelling would that be for private companies to go out and say, we need to get in loans, we need to expand, we need to build and take the next leap of growth from here on?
Yeah, that is true, but we have also to see that the relationship between, definitely there is a relationship between the interest rates and the investment, but I have also seen in the past that the interest rates which are say at the current level, at these levels it has not hampered the investment in the past. We had a period where the interest rate were in the similar range, but is still the investment in the infrastructure sector, the power sector, all that took place even at these interest rates level. So there is definitely some pressure on the interest rates, and there is a concern around the interest rates. But will it hamper the investment? I think it will need a little bit more time to get a firm sense on this. But my view is that we may be all right as far as the investment in the economy is concerned, and all the sectors are looking good.
If I take the example of power sector, Mr. Kumar, 2 quarters ago, no one thought that the power sector could be a troubled sector. But in your last quarterly performance, when I say yours, across the category, all banks had to take compulsions of write-off there. Are there any other dark points or black spots which currently markets are not recognizing, but you think that they could hit us or haunt SBI in FY19?
No, I don't think so. And as far as power sector is concerned, the sector is a stressed sector that was known for quite some time. It is not something which came to be known only in last 2 quarters. And in the last 2 quarters, what has happened, that whatever stressed assets are in the power sector, they have all been recognized as non-performing loans by State Bank of India. And if we look sector by sector, I think almost every sector has gone through the pain, be it steel, be it power, be it road, textile, telecom. All sectors were in stress, but what we are seeing now is that the pain seems to be over. And power sector definitely also, if I look at the capacity which is currently available, and the demand in the country, and the fresh capacity which is coming up, I think in 2 or 3 years' time, we are moving to a situation where all the generating capacity may not be enough to meet the demand. So power sector also, the turnaround is possible, and steel sector we already have seen turnaround. And telecom sector also, because all these stressed assets, whatever was to be recognized as NPA, that has already happened. So there, from State Bank balance sheet, again I am repeating that I don't see any major surprises coming in. We have given the guidance of 25,000 crore, which is under our watch list and distress. And I have also said that our fresh slippages would not exceed 2%, our credit cost would not exceed 2%, and I am sticking to that guidance.
Right. And with the turnaround in these sectors, you do not believe that, given the legacy issues, there's an element of a trust deficit, so to speak, to actually extend out fresh loans to these segments, Mr. Kumar? That question really comes in from the kind of perception challenge that PSU banks such as SBI also face in view of what's happened in the past, with the big scams that broke out, especially PNB. And so, what gives you the confidence that the lending culture and the perception on the lending culture with PSU banks is likely to see a sea change, which can then propel SBI's loan growth to 10 to 12% from here?
So basically, even if I look at YOY number in the month of May, we are at around 6%, and as the resolution happens, the capability to lend will be augmented, and the stress, the assets where the resolution happens, likes of what we have seen in Bhushan Steel, Electro Steel also, we have got a judgment. So the new promoters will definitely be investing in these capacities and these assets. There will be a demand for credit. So the outlook for increase in demand for the corporate sector seems to be much more positive today than it was 6 months ago. And as far as the consumer lending is going, that continues. There continues to be a strong growth, and the last quarter, the numbers for the housing sales which has come up. So even the housing sector, which was where the sales were very subdued, that sector also is picking up. So there will be a demand definitely for the housing loans, personal segment loans, which are mostly against salary, those loans, auto loans, those segments are growing at a fairly decent rate, and a little bit of demand picking up from the corporate sector. So 10% is something which I consider to be very achievable for State Bank of India. And as I said, that currently YOY growth of 6% gives me confidence that we will be able to increase our lending in the coming months.
You know, the big picture for the Indian banking sector is that PSUs are losing market share, private banks are gaining market share. But in case of State Bank of India, last when I checked up, you had not lost market share. Now, is there scope for you to gain some market share, because there is going to be a challenge with smaller banks, the ability to lend? Some of them have been asked not to lend. There are some banks also where they may not have enough capital also to lend even if they want to lend. Is there a serious case for SBI to improve on their market share?
So again, the question is about the business strategy. For State Bank of India, increasing the market share is not as difficult. Today, if I raise my fixed deposit interest about by 25-30 basis point, I will start gaining in the term deposits. But that is not our strategy. So where do we grow and where do we gain the market share, and in which market segment? That is where our focus is. So for example, savings bank franchise, it continues to be very strong. When I compare with other private sector banks, the percentage of current account as compared in the overall deposits mix, so that is relatively lower. So bank's emphasis would be whether we can increase the market share in current accounts and not in term deposits. Similarly, on the loans side, we are increasing the market share where the returns are better. But we will definitely be able to protect our market share. But the strategy of the bank is to improve the earnings and return on assets. And the entire business strategy is and has been defined for improving the returns and market share. Even at the current rates and the current levels, as you have rightly mentioned, that we have been able to protect. So there may be some gain, but the gains in the market share or the top line growth at the cost of sacrificing the profits, that is not what our strategy is.
Mr. Kumar, I want to touch upon that aspect, on improving returns. I think you've also guided for, an ROA of 0.9 to 1%. SBI is a bigger conglomerate now holding its subsidiaries as well. For the entity as a whole, how do you plan to make it to that mark, given that the subsidiaries also come in with their challenges?
So our subsidiaries are doing exceedingly well, and I had mentioned that the value in the subsidiaries that also we are planning to unlock in the next 2 years, current year and the next year. And apart from that, apart from improving our operating income, for which, as I have said, that there is a definite strategy to improve the operating income, the interest income or net interest margin, they are also expected to improve, because in the previous years when the account became NPA from the back date, there were a lot of reversals on account of the interest income booked. So these are some of the factors which will improve our pre-provisions operating profit, and the credit costs which are as high as 3.6 to 4% in the last year. When these costs come down below 2%, so automatically there will be an improvement in the return on assets. And State Bank in the past has achieved these levels, and this is something which is not beyond our reach. In fact, some of the analysts in my meet mentioned that State Bank may be probably doing better than this, but by nature we never give very optimistic guidance. Whatever numbers we have stated, we have kept sufficient cushion and cover for ourselves.
General, if you have to talk about FY18 and how the NPA cycle has moved, Were you slightly surprised with what every bank had to take, or would you say that it was only RBI directive which in a sense changed the guidelines not for SBI but for everyone?
No, the guidelines for everyone, and every bank had to comply with the framework which was given by Reserve Bank of India on 12th of February. So definitely there is an impact of Reserve Bank of India guidelines, but I believe that in terms of accounting, in terms of recognition, there is a much more clarity as far as banks are concerned. There is no scope now for any differences in opinion on or interpretation between the banks, their auditors and the supervisors. So to that extent, the RBI guidelines are quite helpful, let me put it this way.
You will be the biggest beneficiary of what is happening in the NCLT space. You had some advantage in Q4. You've already shared that you have a large exposure to NCLT too. So can you just break it for our viewers as to what would be your assessment of the way how NCLT is moving in FY19? What could happen for SBI because of NCLT 1 and NCLT 2?
So NCLT 1, we have 12 cases, and one of it has been resolved. That was also a fairly large amount for State Bank and the industry as a whole. One more decision of NCLT has come. So earlier our expectation was that NCLT list 1 by 30th June all cases will be resolved, but there is a spillover, and the resolution will be complete by 30th September. The State Bank of India NCLT 1, where our exposure is about 48,000 crore, we are holding a provision on the portfolio basis at 56%, which in our view is more than adequate, because we are expecting a recovery of 48 to 50%, and whereas we have provided 56%. NCLT 2 is about 29,000 crore, and there also the provision State Bank is holding is 75%. So that way, on both the lists taken together, we have provided more than what I believe is required, and as the cases start getting resolved, there will be some write-backs of provisions for the bank. And NCLT 2 list, ideally it should have been resolved by December. It should be resolved by December 18, but maybe by March 19 we will see resolution in all these cases also. So that way NCLT 1 and NCLT 2, all the cases will be resolved within this financial year, and depending upon how much provision each bank has made on this, there may be opportunity for write back.
Right, Mr. Kumar, I know we have to let you go, sir, but just one last question that I have. Since you touched upon unlocking value in your subsidiaries, which are the subsidiaries that you're looking at? How much are you looking to raise, and when can we see that process unfold?
We have already planned that in what manner do we go about, but 3 subsidiaries, SBI General, SBI Cards and SBI Mutual Funds, all the 3 we have a plan to list them next year, and this year we may do some small parcel sale to discover the price. That is what the process we followed for SBI Life. SBI Capital Markets is another subsidiary where there have been some changes in the business they handle, and we are looking for some investment banking partner.
Okay, so closing comments, Mr. Kumar.
Okay, thank you.
Fair point, please go ahead.
Okay, all right.
So,
earphone kharab.
Okay, I can take the liberty of asking one last question. I think you can hear me. So, Mr. Kumar, if FY18 was a challenging year, I would imagine that FY19 would be a stable year. When do you think SBI will come out and say that this is the year of growth and glory for us?
I think he's left, Nikunj. He had to rush for a meeting. But suffice to say that he has at least laid one timeline for the markets, and that is that second half of FY19 is when you can expect profits from the business. Now, remains to be seen?
No, just look at the confidence. And I purposely asked him this question that, look, what is new about claiming that our credit policy, our book is going to be stable? Your predecessors have also said this in the past and they've gone wrong in assessing that. And he said, look, there are two options. Either you can trust me or you can wait.
Yeah.
And that is, you say this kind of a comment when you're reasonably confident, sure, certain. And for me, that is the key takeaway. Because, judging the book quality, it's an art. It's not in science.
Yeah.
What happens to the economy after 6 months, we don't know. If RBI comes out with a new directive, things will change. But he's sounding bullish. I've never heard anyone.
At a time when he again accepts the fact that there are challenges with rising costs of funds. So we'll have to see. But we'll have to give them the benefit of doubt. With that, we come to the end of this edition of The Market. First Trades from Nikunj and myself and the entire team that put the show together. Thanks very much for watching.